hey, good afternoon. Good afternoon, everyone. It's great to see you. Thanks so much for going ahead and being here. I can normally barely say my name in 45 minutes, so we got a lot to do in a very short amount of time. So let's go ahead and get right into it. Yeah, well, thank you. 5x5. Awesome. Good afternoon, everybody. Real quickly, trading involves risk, not just reward. I want to remind everybody about that before we get going. Please consult your registered financial representative and a risk trading plan before ever going ahead and taking any trades. With that said, though, thank you very much. I just recently won real money trading competitions over in Italy, Las Vegas, New York, and Orlando here over the last few months, and Las Vegas and Italy just in the last few weeks. So I'm going to show you some of the same techniques that we use to win those, and so it couldn't be possibly a better time to be here than right now. I don't have a lot of time to talk about myself today, so let's just hit some brief things. My website is becomeabettertrader.com. You can learn about the 19 trading competitions I've won around the world. That's wonderful. Here you can go ahead and if you get Modern Trader Magazine, I was featured in the January edition of that, and stay tuned for upcoming articles as well. There will give you some great, this is my trading setup, so you guys kind of see there, and I got that awesome little coffee cup with my beautiful daughter on it. I was just featured 2 weeks ago in the largest Italian magazine in the financial section, featuring my trading competition wins and the accomplishments we've had, along with some other top traders in the world. So great stuff. And then I went ahead and also have written articles on trading strategies, like in Traders Magazine, which has been featured in 5 different languages. But in the end, I like to bring it back to where I started. This is my book collection. The books on the right there are the actual books that I received from the library to check out to learn how to trade the markets, or so I thought when I was a teenager. So I was just like many of you here, working multiple jobs, having a family at home, and one thing I didn't have a Rob Hoffman as a mentor, but I did go ahead and have commitment, and so I went through a lot of ups and downs to get to where I'm at, which is why my company name is Become a Better Trader. This is why we're all here today, and these are the trading competitions I've won around the world. The ones in blue are international competitions. The one in black are domestic ones here. Those are real money trading competitions, and every single one was not only real money, it was on site, with the exception of one, which was internet-based, sponsored by a broker who had everybody's live trading accounts up there on the screen. Broadcast, that was one back in 2011 there, Infinity Futures Challenge. But all the other ones were live, in-person events. So this is kind of what some of those look like, especially the international ones. They have a bunch of people lined up, like a herd of cattle representing their countries from around the world. And so it's pretty intense, to say the least. Here's actually my charts in the backdrop. And this is pretty exciting. This was my equity curve during the trading competition in Italy a year ago, and then ironically, I more or less repeated that, actually made it even straighter this year in the competition a few weeks ago. So really great stuff, and here's some pretty impressive trading profits over the course of 12 hours of the events, which was actually 6 hours of actual trade time. So and these again are real money trading profits, not hypothetical, not theoretical. This is all real money stuff that we did. So really, what the question is, what helps make me more successful with these key strategies? Having a diverse set of key strategies is important for up markets, sideways markets, down markets, and so what makes me successful is this diversity of tools. Today I'm going to show you one that I use a lot. In fact, it was the preface to a trade that I took this morning in my live trading room, so I use it a lot. And and what's nice is, real quickly, before we get into the strategy, these are some testimonials that just came in very recently here, and they mean a lot to me because these students are really good students, and both of them have a common theme. These are real testimonials, completely unaltered, undoctored, anything. So, I stake my credibility entirely on them. In fact, the one student actually included as 1099 for verification. But basically what the gist is, if you look at this top line, the trader had been trading since 1992, and he'd lost money every year except for last year when he first came to my live trading room here, is when he first came to us. So he included his 1099 form showing his profits from 2015. Then he goes on to talk about our awesome customer service and everything else. But the point is, the trader's been trading since 1992, never had a winning year, and then he joined our live trading room last year, and then went ahead and had his first profitable year. And then this is another student of mine, he's a psychologist, and he's been with me for several years, and so it means a lot to me too, when he just came up out of the blue and sent us this back on the 24th of May. I'm keeping careful records now, profits and commissions and fees, and I'm more consistently profitable using your methods than at any other time since I began trading in 1991. I still have a long way to go and I'm learning old bad habits, but I have worked under several mentors through the years, and your methods are the only ones that have worked for me. So pretty exciting. So I'm going to share one of those strategies with you here momentarily. And in fact, ironically, I became the first American to ever win the international trading competition in Paris, France, back in 2012. And one of the very first trades, actually the very first trade I took, was in Crude Oil, and it was actually a variation of the trade that I'm about to show you. So you know, and then also this particular here in 2014 in this competition here, where I grossed about $4,800. Most of these trades were surrounding the strategy that I'm about to show you as well. So yeah, and again, then I actually used a variation of this morning as well, and I went long here this morning in my trading room, and the preface to that was this buy signal that we're about to show you in just a moment. So let's get right into it, shall we? So what this is, it's what I call a full spike. This is a wide range stochastic pop against the trend. When do I use it? I use this particular one in trending markets. Now, we heard the previous speaker talking about how trends only happen about 40% of the time, which on a longer-term basis, especially, that may be correct. The beauty of this, though, it can be used on an intraday basis, 2 minutes, 5 minutes, 15 minutes, hourlies, and then it can also be used on the dailies as well, and across a vast array of instruments. So it's really diverse, to say the least. So what's the default calculation on this strategy? Most of you, for your stochastic, will be a 1433 for this stochastic is how it's going to show up in most of your trading platforms. I have some ways that I go ahead and I tweak these as well, but the default calculation will be 1433. Where's the entry? The entry is going to be a close greater than 80 on the stochastic spike, or it's going to be a close below 20, and we're going to talk more about these things in just a few minutes. Where's my exit? It's a trailing stop. Okay, and I think I included some slides for you here. Despite the time limits, I think we have something to show you how I do that. Where's the stop loss? Okay, basically what I'm looking at is trades past a preset stop loss number. Okay, so whatever your stop loss number is, whether it's in dollars or it's in ticks or pips, whenever you trade, so you have a preset stop loss for each of your trades in your trading plan, or a key support resistance level like a 20-period exponential moving average. This can vary because my initial entry may be taken past the 20-period exponential moving average, especially if we're using the default setting that you see up above. If we use my more strategic one that I use frequently, even more so, it gives you a lot more trades, and it goes ahead and will appear before the 20-period moving average. So it makes the 20-period an easy target for stop losses. So the key is to know your stop loss, your stop level before the entry. All right. A couple other things there. Know your exits, scale out, and stop out points in advance. We never get smarter once we get into a trade. So I want to go ahead and just remind you, know exactly what your exit strategy is before you go ahead and get into the trade. The best trades start where the stochastic comes from above the 80 level and falls below the 20 level, or starts below the 20 and rises above the 80. Another thing to note with this is we want to use this in the direction of, and you'll see it's marked out here, my BBT trigger and momentum indicators. Those are some very important tools that many of my students like to use and I use. So for the purpose of today, being a guest here with our event, many of you may students of mine, and so I want to say watch and use in the direction of a 20-period exponential moving average. Now, if you go ahead and your favorite moving average happens to be a 19.26195 simple moving average, that's the secret one, of course, or a 21-period simple or exponential, it's okay. Somewhere between 19 and 21 periods, I use the 20-period exponential moving average. All right, so this is what this looks like. What I'm looking at is over the last 20 bars, I'm looking for an uptrend, okay, in this 20-period exponential moving average. So what you don't see here in the backdrop, this was going up here in the backdrop. The stochastic was above 80, okay, and pulls down to or below the 20 level. Okay, and so that's what this black line is here. The 80 level on the top here, and then the black line down below is the 20 level. So what we're looking for here is a pullback. It doesn't matter if this is a 5-minute Russell chart, but I'm going to show you daily charts of crude oil and spot forex. It doesn't matter what you're going in trading with this. Equities, of course, it's all the same. But basically, what we're looking for is a trend in the 20-period exponential moving average, and then we're looking for a pullback where we start from above the 80 level and fall below the 20. And then we're looking to go long on that bar that closes below the 20 in an uptrend. Okay, so in an uptrend, I want it to go ahead and start from above the 80, pull down below the 20. That's what I call a stochastic pop. It's either popping down or I'll show you the opposite side of this in a downtrend in a few minutes. It's a wide range stochastic move. Okay, Steve, so hopefully that answers your question. So it's a wide range move from above the 80 to below the 20 or below the 20 above the 80. Now, but in an uptrend, we only want to use the ones that are starting from above the 80 and pulling down to or through the 20. All right, so what's happening here, so the entry points in this case, here, it starts from above the 80. As soon as it closes below the 20, we're looking to go long. Okay, once it goes ahead and it closes below the 20, we're looking to go long. Starts above the 80, goes down below the 20 in an uptrend. All right, and usually what I'm determining to determine an uptrend, I'm looking at 20-period exponential moving average, and I'm looking at the last 20 bars of data. So when I look at the last 20 bars of data from left to right on the screen, will it show that it's an uptrend? Okay, that's a very simple way to go ahead and gauge the trend. Let's look at another example. This was the Russell 5-minute chart. Let's look at a Euro daily chart here. Okay, doesn't matter whether it's spot forex or Euro futures, but here's the same scenario. We're in an uptrend over the last 20 bars of data. Okay, and then what we're looking for from there is to start from above the 80 level and fall down below the 20 level. Then the long side trade is taken, and the expectation is the market's going to pop back into the direction of the trend. Okay, I typically, Tim, use this on 2-minute or above time frames. Okay, 2-minute or above time frames. It can be used actually on tick charts as well. Truth be told, I don't tend to use much of anything on a 1-minute chart. I either use tick charts, a little bit wider range tick to longer range tick charts, not the super small ones, or 2-minute and above charts, okay? And actually, I just showed you a few minutes ago how we used a variation of this in the live trade room this morning based on a 2-minute chart, okay? Here's another example of this, same thing. This is crude oil, another daily chart here. And so what happens is, you see, you got this great uptrend going on recently in crude oil. If you've been following my nightly commentary on crude oil, we're very close to another opportunity in crude actually today. If you watch my nightly videos, we talk about that because we're back above the 50 level. But going back to this over here, we clearly had an uptrend in place. You see how we started from above the 80 level, and we went ahead and came down below the 20 level. So we're looking to go long when it comes down below the 20 level. All right, and then we're looking to take the long side trade. All right, now, so you see some of these with the default settings are basically they don't fire off until we're below the 20, so you can't use the 20 as a stop loss. You have to use a predetermined stop loss value because whereas, I have another strategy that would fire off trades on this and this, where these all would fire off before the 20 period. Then you can use a stop loss right back behind the 20. Makes it really easy to use. So let's look at some variations of that actually while we're talking about that. So as we're looking here, here's some more examples. Now this is with my modified version. So I gave you the default settings that everybody can start using right away and on your own. But you'll notice now, look at my modified settings for this. My modified settings here, we go ahead and actually we fire off. We'll also fire off a lot more of these signals. This is gold with a daily chart, an hourly chart, a 15-minute chart, and a 5-minute chart, just to show you how to using it in different time frames. And so gold here, in this case, was in an uptrend in this example. Well, so in an uptrend, what we're looking to do with gold is have it start from above the 80 level and fall down below the 20 level and then go long, in this case on this bar here. All right. Now, then from here, we're looking to ride the trade up. Okay. Over here, here's an example of this on an hourly basis in a downtrend in gold, and so now we're starting below the 20 level, that's this line here, going up to the 80 level or above. So in a downtrend, you see we're looking for just the opposite. We want to start at or below the 20 level and rally up at or above the 80 level. All right. So in this case, it goes ahead and fires off right there and then rolls back down. Okay. So starting below the 20 and going up to the 80 level, right here, looking to short the close of that bar. Okay. Now, the way I do this on an intraday basis, when I go to execute these trades, and that's why I have actually a little clock here, pull that over real quick. I have that clock. So like right now, let's say, because this is a 5-minute chart over here, let's say this was forming on the 5-minute chart. Well, so what I'm going to do is I'm going to wait when I see this setup happening here, how we're starting below the 20 level, pulling up to the 80 level, so I'm seeing my signal fire off. This black line right here is the 20-period exponential moving average. Don't worry about all the other stuff. Those are just advanced indicators to go ahead and make the trading a lot easier. But here we have the 20-period exponential moving average. Okay, and so now I'm seeing that setup starting to happen. So what I'm going to do is sit there and wait until if this were this bar coming up right now at 410. So what I'm going to do is wait till a few seconds before that 5-minute bar closes up, and then I'm going to take the trade. So like 409, 57, 50, 55, 57, so that I can see it's going to lock in with that structure. That's where I'm going to enter the trade on an intraday basis. So right before the bar is going to officially lock in, that's when I'm going to take the trade. Why not wait till the bar locks in completely? Because a lot of times they'll just open up and start to shoot right down. You'll see in some of these cases, it won't even give you a chance. There won't be any sort of retracement in many cases, or such a small one you won't be able to get into it before the market starts tearing off back to the downside. Because remember, this is a trend, and so we're already within the trend, and all this is a short-term retracement against the predominant trend, looking for a push back into the opposite direction. Okay, so a couple things to go ahead and keep in mind there. And so here's this is kind of great. This was at the the London Money Show, not this past year. My competitor actually showed up for that one, which was awesome, and I was able to win that trading competition. But the year before in London, my competitor was a no-show, and so what we ended up doing was they couldn't get the competition going, so I'm like, well, I'll just trade for myself for the hour. And so what ended up happening was I just did these trades. I just was trading, and this was one of the trades that I actually took. So you'll see we had the market moving to the downside. And by the way, the one where my competitor wasn't able to show up or whatever, we didn't count that as a win, obviously. There was just no competition. But I decided to trade live with the group nonetheless. And so here you see what happened was the market, here was the stochastic. It started from below the 20 level, spiked up to and above the 80 level. So I just went in and went short and took that right back down. So that was a trade that I took right there live. I was the only person who traded live in that entire event, and it was great for people to go ahead and see that. Okay. So, and then in Barcelona, I was actually teaching a class for TradeStation, and I just got done teaching the class, and then this trade setup happened. So it was kind of fun. I just got done teaching the class, and then all of a sudden there was one of the setups happening. They're kind of live, so you see the same kind of thing. That's why I show it. I do these all the time. So I mean, if you're in my live trading room, you see these trades constantly. It's just kind of interesting that since I was teaching classes and I'm in foreign countries and stuff like that, and then using them, I like to show them. So you see what happened. We had the nice downtrend on the 20-period exponential moving average, then the market spiked back up here, started below the 20 level, pushed up above the 80 level, and so I went in, went short, and then it came right back down there, so that was, nice little fun trade. All right, so here's some more examples of these. I'm trying to show you different examples on different markets. Apple, daily, hourly, 15-minute, 5-minute. Doesn't matter what you're trading. And of course, if you're using this as an option, then what you're going to want to do is do a high delta in the money play from my perspective, and trade in the direction of the underlying instrument. So the same thing here. We're looking for it to start below the 20 level, rally in a downtrend, rally up above the 80 level, and then go short. Okay, in a downtrend, we're looking for it to start below the 20. Okay, ideally rally up above the 80 level. Now in this case, it didn't quite get to the 80 level. There's actually another trade that I have called a half spike, which is really great to get me a lot more of these trades. Might have a chance to talk about that later. We'll see. Since we don't have a lot of time, we'll talk about it later. So right here, same thing, start from above the 80 in an uptrend. We start from above 80, fall below 20, and then we look to go long for resurgence to the upside. Start above 80, fall down to or below 20, and look for it to take back off again. Okay, so you get the theme. In an uptrend, we're looking for a short-term wide stochastic spike against the trend to create an overbought or oversold condition. In an uptrend, you're creating a short-term oversold condition, and then looking for a resumption. What this is doing basically is this. For retail traders who needed those big long bars and a lot of green on the board to finally go long, it's stopping out those retail traders. For the traders who went short down below, these big bars they were spiking up against them, causing them to lose a bunch of money. Well, when this pullback starts happening, it gives them false hope down below that the trade is going to come back their way. Okay, so that's kind of what's happening. So I'm looking for those kind of scenarios where retail traders are losing money, and then of course the traders who are thinking about going long, but then the market starts to pull back. They're like, whoa, I'm not taking that trade. Good thing I didn't take that trade. That would have been another one of those losers. But then what happens is the market's basically doing a reset here. Okay, and then we're looking for a resumption back to the upside in this case. The opposite is true in a downtrend. We're looking to go ahead and have this short-term reset back to where we get an overbought condition within a downtrend, and then we're looking for the market to resume. Okay, and again, it doesn't matter whether we're talking about ETFs, equities, futures, and then let's say options. It's the same thing. With the options, you're looking just to trade based on the underlying instruments activity with high delta in the money plays from my perspective. So here you can see an example. This is one reason I like using my settings on this indicator. I gave you the default settings earlier. I like using my settings because what you'll do is you get a lot more trades. You'll see it fire off a lot more signals. Now, example, even with my version of the strategy where we actually close back above the 20-period exponential moving average. So that was an example here. You saw with the default setting, you're going to close back beyond the 20-period exponential moving average a lot. This is an example, though, where if you go ahead and take this trade, even with my modified settings, you'll go ahead and actually have the close back above the 20-period exponential moving average. So again, that's why you always want to have a predetermined stop loss number, because I'm still going to take that trade. In fact, I'll tell you right now, when using my advanced settings and strategies on this default indicator that I gave you, what happens is if it goes all the way back up and closes above the 20-period exponential moving average, that's an even super higher, more probability to trade, and I want to be on par. I want to be on to par with that. I want to be trading that. Okay, and so the closer that it can close near, so the entry is to, or even beyond the 20 with my modified settings, that's an even better trade, okay? And so here you see what happened. We start from above the 80 level, fall down to or below the 20 level, and then I'm looking for a long side trade. Remember, it's at the close of this bar, and usually where do I take the trade? A few seconds before the close of the bar, right? Very important to that process, all right? So the key is having a trend. Doesn't matter whether it's a 2-minute chart, 5-minute chart, a 3-minute chart, a 7-minute chart, something 2 minutes or above, or a high tick value. So if you like to trade on tick charts, 500 tick chart, 1,000 tick chart, 2,000 or 5,000, a high value tick chart, not these 50 tick charts and 100 tick charts and crazy things that some people use, but the 1-minute charts. I don't like 1-minute charts, too noisy for me. 2 minutes and above, okay? So that's the key is then you get a trend. Just trying to simplify that and get a trend. You go ahead and get a pullback within the trend, and then you're entering the trade. Now, then from there, we're looking to go ahead and actually trail the profits, and I want to see if don't think we actually have as I was looking at it, because I was trying to figure out how to shorten this down to a tight enough time, but let me see if I can actually quickly pull up and feel free to go ahead and type in your questions. I'll try to answer a couple of questions there as well as we're going through this, but I want to see if I can actually pull up a trailing stop for you, and just so you kind of see the methodology for that, because that's one of those key things that a lot of people can definitely learn from. So let's see here. Trying to see if we can find one of those for you here. Since I think we have enough time, we did a good job there. I want to show this trailing stop process here. Okay, so here's my trailing stop methodology. So basically what we're looking to do with this, once we get into a trade, remember before we've gotten into a trade, we've already identified the potential target. Usually that's going to be a daily, weekly, monthly pivot point. It could be a Fibonacci extension number or a key support resistance level, common ones that everybody's looking at. That's what I want to see, common ones where everybody's looking at them, so we're more likely to stop. So in this case, this is the Japanese yen, and so right here we had a pivot point up above. All right, so when the trade is entered, what we're looking to do is I initially identified the target. Well, once we get about 50% of the way to the target, then I want to start trailing by about 50%, okay? So 50%, 50%. Then as we get about 80% of the way to the target, I want to trail by about 80% of the profits earned. Why? Because what's more likely to statistically happen? Is it more likely to just keep going forever or more likely to pull back? It's more likely to pull back. And so if we're getting 80% of the way to my target, I don't want to sit there and watch it come all the way back and take out a majority of those profits. Okay, and then as we get up to the target, then we want to trail by about 90%, because statistically speaking, after it's been going up the ladder, is it more likely to stop and reverse or more likely to keep going? We know that it's far more likely to at least temporarily, if not, quote unquote permanently, stop and reverse there and come down. So starting at 50%, then 80%, then to 90%, and then when it doesn't break through there, which often it won't, then I trail it right up to price waiting to be taken out. Okay, and so that's basically the trailing stop methodology. I'm giving it a chance to run, but if it's not going to run, then I want to lock in its profits. How many of you have ever gone ahead and had a perfectly good trade, and you put a target out there? You didn't have a trailing stop. You had a target out there. You wanted just a little bit more money on the trade, and then instead of it hitting your target, it stopped and reversed and actually turned into a loss. How many of you have had that happen? Most of us, right? Exactly. Fear and greed, and so absolutely, and so that's what we're trying to avoid. That we're trying to give it that chance to run because we're greedy, right? We're doing this for a profit, but then we want to make sure that we don't, give back all those profits as well. So that's the best way to go ahead and do it. So where we left off was right here with these slides. Let's go ahead and show another slide. And I think we went ahead and you answered a lot of the questions along the way there as well. I'll keep trying to answer some more as we go along here. So here's another example, all right? And so let's walk through this together. We're in an uptrend. So what am I looking for? I'm looking for pullbacks within the trend, right, gang? I'm looking for pullbacks within the trend. I want to start above the 80 level and fall down to or below the 20 level. I want to go short at the, or sorry, long, excuse me, in an uptrend at the close of this bar that generates the stochastic pop, okay, or stochastic spike. Then we're looking to go ahead and trail it up as it's going up until we're getting close. You know, we hit a key round number support resistance level, a moving average, previous high, pivot high, whatever your target is. We're looking to trail it up behind there. So at some point there, it's going to pull back enough to stop you out. Okay. Now in an uptrend again, what I like with the custom settings that I have that I use with this, you'll see it gives me a lot more trade entries into these. You'll see trade after trade, whereas with the default settings I gave you, you'll see one trade typically you know, each period you're looking at. So if you're looking at a 2-minute chart, it could be hours between them. If you're looking at hourly charts, it could be days between them potentially. So you get less charts, but when you see them, or less signals, but when you see them though, they're usually very powerful signals. So it's a great place to start, all right? And then I have the modified versions, because what I'm really looking for, a little secret here, I'm looking for these ranges of 60 ticks or more. So really, if the market comes from the 100 level down to the 40 level, well, that's a 60 tick spread, okay? And so I refer to those as half spikes there. So what I'm looking for then when I get that kind of thing, I'm looking to go long into that for the continuation. All right. Now, what's important about this is that, like I said, out of these 18 trades, the far more than not, I was taking this even like in this incredible competition, you know, back in Paris 2 weeks ago or 3 weeks ago now in Italy. I sat there and I waited and I waited and waited for this setup to go ahead and happen. It helped me win the competition. My equity curve was, you know, phenomenal during that process. In fact, this was the equity curve from last year in Italy, not this year, but look at that equity curve. This was one of my competitors' equity curves, okay? This was my equity curve. Wouldn't you guys like to have that? And by the way, my equity curve looks phenomenal here in 2016 as well. Absolutely phenomenal. Okay, real trading, real money, not hypothetical, but looks absolutely phenomenal. My real trading there that I do like in the live trading room. You guys get to see it if you guys are part of the live trading room. But this was during the competition. Well, this was also this year in the competition. So what it looked like, the difference is last year it started out with bigger gains, then went to some smaller gains early in between the heart of the European session and the pre-US session, so it was kind of slower. Then it picked up really good, and then it went dormant, and I stopped trading. So that was my equity curve there, and I won that competition. This year, I went ahead and started out with smaller gains, and it got bigger gains and then got bigger gains, and this strategy was one of those strategies that helped me win this trading competition. Okay, so and then like I said this morning, you can see it right there. You guys can all see it on the Russell if you use the 1433. So that's the default version of that, and you can see it right over here. We went ahead and fired that off this morning on the Russell, and then shortly thereafter, I was taking a live trade in the live trading room this morning, going long. So so really great stuff, gang. It's very important, and that's just one of those strategies. You know, and obviously we have 25 minutes, 35 minutes to discuss this initial strategy. It's just one of those strategies that's helped get us to the point where so many of these students, you know, that have turned around since 1992, their first profitable year last year, with a verified 1099B statement. Roger, since 1991, he's been testing various methods, having to unlearn methods. When you pay a lot of money to a bunch of different people, you pay and get a lot of junk. Then sometimes you want to try to get value out of it, but then you realize I just got to let it go, just got to unlearn it, got to let it go. And so we worked through several mentors through the years. Mine's the only ones that have worked for him. That's his statement, completely unedited, completely undoctored. So what we did was, I know a lot of people make a lot of offers for you for $500, $1,000, $2,000. I've won all these trading competitions around the world, gang, and so what I'm doing is doing something a little different. I'm going the opposite direction. What I want to do is try to give you guys a lot of value for virtually nothing, so that you can realize, wow, no wonder he's won all these competitions, real money around the world. I've won more real money on-site domestic and international trading competitions than anybody else in the entire world. That's real money, gang. Real money, okay? So that's a real great opportunity for you guys. So what we did was I've got two setups that I want to offer you guys and build upon what you've learned today here. And so what it has is the entries, exit, profit management, stop management in detail, because obviously I got 35 minutes to talk to you about this today, and then 10 minutes to share this information with you. So if you go to becomeabettertrader.com/setup, what you'll see is I'm offering you one aggressive trade with the specific entries, exit, stops, and profit management strategies. It's about 3.5 hours of just training on a couple of these setups. It's designed to help you find precise, award-winning strategies to fit your personal style. It includes also my personal and optimized settings for the stochastic that I shared with you, so that because that gives you more trades, more setups, more entries, and it's, like I said, it's about 3.5 hours of training. So it's really great. It's for intraday and end of day, so I show both types of examples for intraday and end of day, so that my full-time traders get a lot more trading opportunities, and even my part-time swing and options traders can easily set these trades up with this methodology. Same ones, the same strategies I'm using in my live trading room, and I'm using international competitions around the world. Now, obviously, I have several different tools in my toolbox, but this is one that I love to use a lot, and then I gave you the custom settings for that as well. So it gives you instant access, gives you the indicator settings. I gave you the default indicator for the stochastic in that, but I'm going to give you my actual preferred settings, so you guys will have that exactly how I set it up. So you'll have ideas and strategies I don't share publicly normally, and also I'll help you be ready for an incredible rest of the month. Remember, we've got Brexit, Spexit, Frexit, and Grexit by the end of the month here. We've got the Brexit. Hopefully, you guys all know what Brexit is. The British are voting on the their decision to stay with the EU and whatnot. Spain, Greece, France all have financial issues going on. There's a lot going on in the world right now, so we're going to have a phenomenal summer of trading. You don't have to have proprietary indicators. I do have my BBT Pro Pack of indicators. So for my students, I cover those as far as how you can use those as well in one of the segments, but the other two segments only have that stochastic, my custom settings for it, which I give you, and the moving average. And so that basically you're going to have those settings and those advantages over everybody else. Again, same strategy that I use to go ahead and win so many of these competitions around the world, and most notably this one here with $4,800 of real money profit, 6 hours of trading over 18 trades. A lot of those trades, there's basically a day in the market where the stock index futures in September 2014, their stock index futures were going straight down. Every time they spiked up, I went ahead and used that strategy to go short again with my custom settings on it. Okay, and it's led to, not only in trading competitions like last year and then this year in Italy again, but also my 2016 as a whole is a fantastic equity curve there. So it's really a great opportunity. Also, as we talk about winning awards, we're the only company in the trading education business, the only company in the entire trading education business that won the 2015 Member Favorite Award. 2015 Member Favorite Award, and that's pretty great, right? So American Express customers, top tier in the world, voted with their money that we're member favorite, okay? So really great stuff there. So with that being said, so it's becomeabettertrader.com/setup. Yes, I can put the link in. Let me go ahead and see what questions we have. Donna says, how do you identify targets? Okay, so Donna, we gave you a couple of our favorites there. Typically, I'm using daily, weekly, monthly pivot points. Okay, those are some favorites of mine. Also, I'm using key major support resistance levels, so ones that everybody's watching, whether it's the 20-day, 50-day, 200-day moving average. I'm intentionally watching what everybody else is watching because usually you'll see at least short-term reactions in those, if not full reactions in those areas. And you can also use things like Fibonacci extensions if that's your cup of tea. Basically, you're trying to identify the things that everybody else is watching for key support resistance. Okay, so that's how I usually identify my targets. All right, and so as far as the markets, stocks, futures, options, Forex, okay, and whether you trade spot Forex or the futures, your currency futures, it's the same. The strategy works the same on those, okay? So yeah, definitely keep that in mind. Okay, and when will you get the recordings? Gosh, I don't know, Susan, but I'll bet you Renee, she's super awesome. She'll probably tell you here in just a few moments how to do that. Does this work in a downtrend? Yeah, Chris, I showed both uptrend and downtrend. Today, I made my money live in the live trading room there, going ahead and trading an uptrend. But the market tends to walk the stairs up and ride the elevator down. So what you end up doing is typically seeing results a lot faster to the downside as the panic sets in, the bloodletting. Okay, so the yeah, I posted the link in there, becomeabettertrader.com/setup. So what it is, it's just for $97 game. For $97, you get this 3.5-hour course, and it's just basically for virtually free, trying to give you some really great setups of mine because I want you to realize, hey, we go ahead and this also allows you then to come to our Q&A sessions as well, which is a great ongoing learning opportunity. I do those quite regularly, and so it's a great opportunity for you guys to be part of those, to come back, ask questions, and grow with us. So it's a phenomenal opportunity to be sure. Can you use MT4 for this? Absolutely, you can use MT4. No question about it. I know many of my traders here today are spot Forex traders and are using the MT4 platform. You can use MT4, not a problem. Okay? Yeah, you know what, Steve? I'd love to go ahead and share all that formulation as far as what the stochastic means and that. But let me just break it down to you. What it is, it's I'm using it a little bit different than most people do. Because I'm using it directionally. So most people use stochastics sideways. Where the market's sideways, and then when it gets up there high and starts to roll back over, they short. When it gets down low, goes back up, they go long. I'm using it directionally, so I'm already trading with the institutional players and looking for resumptions back into the trend. So in a downtrend, I only want to take the high stochastics. In an uptrend, I only want to take the low stochastics. And then, of course, it's even more precise with the entries, with the custom settings that I use for this. Gives me more precise entries as well. Okay. Yeah, I trade the minis. Yeah. So Daryl, I'm a fan. Okay, and all right, so Renee, I think we went ahead and got that. Yeah, by the way, gang, you can call me here at the office, 847-235-6131, to say that here. Try to keep right to time for Renee's benefit, but 847-235-6131 or becomeabettertrader.com/setup. Okay, thank you very much. It's very kind. I appreciate the great questions. I appreciate Renee's hospitality and being here with all of you today. You're very, very welcome. Thanks, everybody. Have a wonderful, wonderful afternoon, and we'll see you on the flip side. And welcome to all of our new family members. Bye-bye, everyone.